What does the Fed or the Chicago Fed think of a number like this strong jobs number we got this morning?
Well, it does seem like a very strong jobs number, and I think the string of job numbers has been, quite good for some time, and we saw revisions to last year that smoothed out the unevenness, and so I think the labor market is in a very solid position, for the U.S. economy going forward. I think that workers are benefiting from, strong demand and able to enjoy stronger wages, and I expect that that's going to continue. I mean, obviously, there's a tremendous amount of uncertainty, geopolitical concerns, the Russian invasion of Ukraine and what that means. But in terms of the fundamentals for the U.S. economy, I think they're good. Obviously, the inflation situation is what's got everybody's attention. And today's labor report, it's good news. It doesn't really change anything that Chair Powell was sort of pre-positioning the Fed for the other day.
Sure, and I want to get to all those bad things in a second, Charlie, but I want to dwell on what looks like good news because we have had so little of it for just one more minute, which is when I looked at the numbers, I saw, again, leisure and hospitality doing well, some home health care workers coming back. You did have another increase in the labor force. Does it feel at all like we're getting on the other side of this Omicron wave and that things are kind of returning to normal in that regard before all this other stuff gets to starts to hit the economy? And we'll get to that in a second.
Well, I think clearly since the Omicron wave seems to be giving way, cases are down across the country. We're very fortunate that for one reason or another, the way that the Omicron hit, it sort of burned itself out quickly enough. Very tragic, of course, in many cases. But, that's an improvement. I do think that the national numbers are, they're not misleading, but there's a lot more detail out there when you talk to people. I've been out talking, listening to business contacts quite a lot. I talked to a Rotary Club just the other day, and you look at what small businesses are experiencing or just walking around and listening to people. You can overhear people saying, wow, they just can't find workers here, can they? And that's why, service is down. It is wonderful to hear that the healthcare industry, more people are coming back, but I think that there's still a tremendous amount of fatigue. And I think that there are a lot of business models, especially for small businesses, that are going to be challenged in the future. They're going to be asked to pay higher wages. And, if inflation's going up and, it's the real wage that's going to equate demand and supply. And so, wages are going to go up if rents are going up, gas is going up, food costs are going up. And there are a lot of businesses where the margins are very thin. And so can they really survive that?
Yeah.
They might try to do that by scheduling workers less and playing around with it. And I think in the current environment, workers are being much more choosy and trying to avoid that type of situation. So
right.
Strategies that have worked
Charlie,
in the past might not work so well today.
You said the other day that the Fed is wrong-footed when it comes to policy versus inflation, and I wondered, how wrong-footed is the Fed? If you could set policy right now relative to the inflation and growth level, where would you put it?
Well, I mean, we're at the effective lower bound. We're at zero. And with inflation pressures, CPI at 7.5% year-over-year basis. Obviously, we need to be moving towards a more neutral monetary policy, certainly by the end of the year, so that we're within striking distance of taking a position that would deal more forcefully with inflation, if that's necessary. I don't quite think that's necessary, but I have to say we need to be positioned for that. Let me remind you, I have said wrong-footed, and I think that's the right term, but it happened very quickly. January 2021, year-over-year inflation, it was under 2%, around 2%. All of a sudden, by April, we were saying, wow, these price increases, we think they're transitory. Used car prices up by 10%. Within 3 months, things turned around. That's not the 1970s story of how inflation got out of hand. Remember, the story there is slow increases in the 60s, Fed losing handle on inflation, creeping up. Oil price shock takes it up, but then it comes down, but it keeps creeping up. This leaped up. I think there's a lot of supply reasons for that. There is a danger it's broadening out in many ways, and wages are going up. So we need to get closer to neutral. Before too long, by the end of the year, we need to be close enough so that we can deal adequately with whatever inflation pressures we see. And I think we'll see more evidence by the end of the year as to how the supply pressures are improving. Plus, we've got the Russian invasion of Ukraine, which is just impossible to know exactly how that will color things.